Hi guys, good morning to everyone. Today we are going to see about the design thinking in a functional accounting. Let me see about that.
Now, I am going to talk about accounting. Accounting is the process of identifying, measuring and communicating financial information to allow the informed judgment and decisions by uses of other called language business. It provides statements we are taking in the bank and organizations in economic activities of financial health scored by branch of accounting, while management accounting focusing on international state to board of financial accounting service and specific the branches financial accounting focused on the preparation of financial statement, balance sheet, income sheet and cash flows the statements of the like investors, creditors and debitors. Regulate these statements in the financial accounting and tax accounting concept of complications with the government tax laws and preparations and the maximum tax liberated to legal and creditors and cost accounting. A subject that we take in the analyze the specific cost of project and the labor of the health presentations of cost accounting, forces accounting and the communications of the investor skills to the established.
The preparation of trading account in a retail business. Study how a retail shop prepares its trading account to find gross profit or gross loss. Amounts of gross profit in a trading business. A case study on how purchase, sales and closing stock after the gross profit of the business. Role of trading account in determining business performance. Study how trading account helps business understand their cost of goods sold and profit. Impact of opening and closing stock to trading account. Analyze how stock values influences the financial gross profit of the trading business.
I am going to give a detailed account of royalty account. Royalty account is prepared to record the amount paid by the users of a resource or right to the owner for using that resource. The payment is usually based on production, sales or usage. Royalty arises when the owner lets them allow another party lessee to use their property, natural resources or intellectual property in return of a payment. Parties involved: lessor, landlord, owner. The person who owns the property of rights receives royalty. Lessee, tenant, user. The person or company who uses the property of rights pay royalty to the owner. Basics of royalty. Royalty is usually calculated on per unit of production, per unit of sale, percentage of sales or revenue. Important terms in royalty accounting. Minimum rent. Minimum rent is the minimum amount that lessee must pay every year to the owner, even if production is low. Short workings. The short working occur when minimum rent is greater than the actual royalty. Recoupment of short working. Sometimes the lessee is allowed to recover short working in future years when royalty exceeds payment. Strike period. The period during which production stops due to reasons like strikes, accidents or natural disasters. During this period, the minimum rate may be reduced or suspended. Examples of royalty. Royalty commonly occurs in mining industry, coal and metals, publishing industry, authors and books, music industry, songs and copyrights, oil and gas extraction, patents and trade markets.
Now, I'm going to talk about bill of exchange. A bill of exchange is a financial document used mainly in a trade and commerce. It is a written and unconditional order by the party to another to pay a fixed amount of money either on demand or a future date. Here, there are three parties involved.
Function accounts. Main function of accounts are recording of all the financial transaction in a book of accounts. A classification has grouped similar transaction into account ledger. A summarizing, prepare a financial statement like a trial balance, a profit and loss account and balance sheet. Analyzing, a studying financial data to understand the business performance. Interpreting, explain financial ensuring the total debt is equal to the total credit of all transactions. The process comes from a financial approach by calculating the difference between the side of an output and verifying the balance through an trial balance. Double entry system. Every transaction affects the least to account with the debit